Alphabet, one of the most undervalued companies in the Magnificent Seven. Alphabet owns one of the fastest-growing cloud platforms, some of the most advanced AI solutions, and an incredibly profitable advertising business. Yet, the market seems to be underestimating its potential. Why is that happening? Why did I invest a significant amount in Alphabet? And what challenges does the company face? Disclaimer: this is not financial advice. Everything stated here is my personal opinion, and I could be wrong. Let's dive in. Challenges facing Alphabet. Like any industry giant, Alphabet faces its fair share of difficulties. But that's normal for dominant market players dealing with various challenges. The main concerns revolve around regulatory scrutiny and legal battles involving Alphabet's biggest subsidiary, Google. Search monopoly. Google controls over 90% of the global search market and spends billions, e.g., paying Apple and other companies to remain the default search engine. Dominance in digital advertising. Google operates both ad placement platforms and tools for buying and selling ad space, giving it leverage over pricing and limiting competition. Controversies around Google Play Store. The company lost a lawsuit to Epic Games, which accused Google of overcharging commissions and restricting competitors' access to the platform. Regulatory pressure. The U.S. Department of Justice has accused Google of monopolistic practices and suppressing competition. Key allegations include paying developers to avoid alternative app stores, signing exclusive deals with device manufacturers, and using its dominance in advertising to manipulate the market. But these aren't the only legal issues. Alphabet is also facing scrutiny from regulators in the EU and the UK. The worst-case scenario? A forced breakup of the company, bans on exclusive agreements, such as its deal with Apple, or mandatory data sharing with competitors. That said, even with these risks, the ongoing lawsuits are some of the most serious Alphabet has ever faced. Will AI kill Google? Some believe traditional search engines will become obsolete as AI takes over. But let's look at the facts. For the first time, annual Google search queries exceeded 5 trillion. More searches mean more ads, more users, and higher revenue. The number of commercial search queries, those that generate revenue for Google, is growing even faster. Google isn't losing the AI race. It's leading it with its own model, Gemini. While new AI chatbots are emerging, Google still holds 90% of the search market, and there's no clear challenger that can significantly disrupt its dominance. AI is helping Google optimize operations, reduce costs, and boost profits. Currently, 25% of Google's code is written by AI, with human engineers only reviewing the final product. This allows for workforce reductions and lower expenses. Projections suggest that AI-driven search will make up no more than 20% of the market in the next 5 years, and an even smaller share of commercial search. That means Google will retain its revenue streams and continue to grow. Why did I invest in Alphabet? There are several reasons why I see Alphabet as a great investment. YouTube is the second largest search engine in the world. Many don't realize it, but YouTube is a massive search platform, and it's owned by Google. Google's ecosystem is deeply integrated into our daily lives. We rely on Google Maps, Gmail, Google Drive, Android, YouTube, Google Calendar, and many other services. Yes, alternatives exist, but Google's solutions remain the most convenient and widely used. From an investment perspective, Alphabet is the cheapest stock in the Magnificent Seven. Yet, it ranks as the 5th largest company in the world by market cap, exceeding $2 trillion. Let's look at the financials. Revenue has grown at an average rate of 17% annually over the past 5 years. Net profit has increased by 25% per year. Alphabet's cloud growth. Another major strength of the company is Google Cloud, which is expanding at an annual rate of 30%. In 2024, revenue growth reached 35%. Over the past 5 years, Google Cloud has maintained a 30% annual growth rate. Today, Google Cloud is the 3rd largest player in the cloud market, following AWS, Amazon, and Azure, Microsoft. Moreover, Alphabet is making massive AI investments, allocating $75 billion to AI development this year alone. A major acquisition in 2025, Alphabet made the largest acquisition in its history. Purchasing was for $32 billion. For comparison, SpaceX is currently valued at $350 billion, and Google owns a 7.5% stake, making it the 2nd largest shareholder of Elon Musk's company. Share buybacks. In 2024, Alphabet repurchased $62 billion worth of its own stock, 3% of all outstanding shares. This was the second largest buyback of the year after Apple. Valuation and future outlook. Right now, Alphabet is trading at a lower valuation than during the 2022 market downturn. If the market doesn't reprice the stock, projections suggest an annual return of 19% over the next 5 years, outpacing the S&P 500. Even if Alphabet's valuation remains the same, expected revenue growth alone could drive an average 14% annual return. As of today, I estimate the fair value of Alphabet stock at around $200 per share. Final thoughts. Google is far from losing its dominance. In fact, it's likely to continue leading in search, advertising, and cloud technology for the foreseeable future. I put my money where my mouth is. I added Alphabet to my portfolio in March 2025. But before making any investment decisions, do your own research. That's all for now. Let me know your thoughts in the comments, and don't forget to like and subscribe.